Hoffman. And on today's call, we have Nancy Chillag of 23rd Street Investors. So, Nancy, thank you so much for being on the show today.
Oh, thank you for having me. Really appreciate it.
Awesome. So, I'd love to learn more about your story. And so, how did you get into commercial real estate and what did you do before?
Well, I'm a retired lawyer and I started investing back in the 80s.
Okay.
My very first purchase was with friends of mine. We purchased a 5-unit Victorian in San Francisco. God, I wish I had that today. Anyway, we had no idea what we were doing, and we managed it ourselves for about 4 or 5 years and sold it and made quite a bit of money.
Nice.
And I was hooked.
Nice.
I was totally hooked and just kept investing. And I have owned a lot of single family homes, small multifamily, office building, warehouse. Nice. And then I want to say about 8 years ago, I got into, or I started looking at getting into larger multifamily to really scale up. And so now I have an interest in over 800 units.
Perfect.
Which is a lot different than a bunch of single family homes.
Oh yeah, for sure. So you've got a pretty diverse, experience and background doing different types of commercial deals, as well as obviously having the background in law, which I'm sure must have helped you as well in this business. So
Well,
how is that translated into what you do now?
Since I specialized in real estate and construction.
Yeah.
Makes it much easier to review all the paperwork.
Nice. Yeah, that's very helpful. So do you still what kind of skills have you been able to transfer over right now in your day-to-day? What are you doing? Are you doing acquisitions, asset management? What is your role?
Mostly acquisitions and fundraising. Reviewing all different deals to see what I want to put my investors in. And my background helps me to be able to do that because in addition to being a lawyer, I'm also a CPA. And so being able to look at all the information that comes in to determine whether it's a good deal, whether the, numbers work, helps a lot.
Oh, for sure. Yeah. So that's a very helpful background to have going into real estate. And sounds like your very first real estate purchase was a 5-unit. So it was a multifamily. Usually people start off with just doing, maybe 1 or 2 units. What brought you into doing the 5 units? Was it kind of a group decision at that point?
One, not knowing what we were doing. Number 2, we got owner financing, which made it a lot easier. Because once you go from 4 units to 5 units, it's considered commercial and financing is a lot more complicated.
Absolutely.
But being able to get the owner financing worked out really well.
And did you get into that lead just through your work as an attorney? Is that how that deal came through?
No.
Owner financing is difficult to find when you're brand new, I feel like.
Well, I'm going to really date myself. My friend and I were sitting at lunch and started talking, and we both knew that real estate was a great way to make money. And so we got up and went out to a little kiosk on the street where they used to advertise real estate for sale. There was no internet back then. And so we looked through that and it said 5-unit Victorian in San Francisco, owner financing available. And we made a few calls. I drafted a contract and we were off and running.
That's awesome. I think nowadays that would probably have been a really good Airbnb, right? So, in San Francisco?
Not San Francisco. They restrict it pretty much.
That's true. Yeah, it's pretty.
But when I
strict
sold
over there.
that, I ended up going into single family homes.
Nice. And so you were in single family for how many years before you went into commercial?
Well, I had some, anywhere from 3 to 6 unit buildings, but I had probably about 25 single family homes over the next, 20, 25 years.
Got it. All right. And so now are you focused in just growing multifamily exclusively, or
I
are you
sold,
still?
yeah, I
Go ahead.
sold all of my single family and my small multifamily.
Mm-hmm.
And now I'm just totally into larger multifamily,
Perfect. And you,
anywhere from 80 units to 250 units. And I do it both passively and actively.
got
So
it.
I have a team and we run a number of projects. And then in some projects, I'm just a passive investor.
Mm-hmm. Got it. And then you did briefly mention that you got into offices and warehousing. I'm assuming you're not in those anymore?
Well, I wasn't on a big scale when I had my law office. I had my own building. I purchased
Okay.
the building in order to operate my practice. And then
Nice.
my husband at the time was a contractor, and so we purchased a warehouse to, store materials and trucks and things like that.
Got it. And what brought you into doing multifamily on a big scale? I know at some point there was that shift or decision to go 100% into multifamily. So how did that happen?
Well, the single family, it's really easy to get into them, but then it's a lot more difficult to manage those on a large scale. So if you want to scale up in the number of units you own, it's harder to do that in single family.
Mm-hmm.
And, it's just a lot more work.
Yes.
'Cause if you want to diversify, then you've got, 4 houses here and 4 houses somewhere else and 4 houses in another state or whatever. And so now you've got four different property managers and,
Mm-hmm.
different contractors and different vendors. And you've got to keep track of all of that.
Exactly. Yeah. So
So
it can be,
multifamily, I was just able to go from, at that time, I think it was like 31 or 35 doors. And now
mm-hmm.
I'm in 800 after, 6 years.
Nice. And so was the transition fairly easy for you? Did you kind of do it on your own, or did you have to, do it with a mentor? How did you transition?
No, large multifamily is really a team sport.
Mm-hmm.
So I associated myself with people that have a lot of knowledge, a lot of experience, and I basically have partnered with them over the last 4 years, I would say, and have been able to do deals because everybody's bringing something to the table. It's hard to do, a large project or multiple large projects by yourself.
Absolutely. Definitely a team sport, and everyone has their own strength and their own unique qualities that they bring to the table, unique strengths. And I think that's really what makes it work for these larger deals. And it makes it more fun and enjoyable too, because we get to share it with other people, share the wealth. And I think it's a lot more enjoyable and less competitive than doing it in the single family space as well.
Exactly.
Single family, obviously, it's hard to scale and there's a lot more management intensive. What are some other benefits of single family versus multifamily?
Well, the single family is much easier to find. I mean, you can just go down the street and look at the for sale sign and decide if you want to put tenants in there and, run it. Where multifamily is much more difficult.
Mm-hmm.
You can do it without a broker, but it's easier with a broker.
Mm-hmm.
And they want to know that you're able to close the deal,
Mm-hmm.
before they want to deal with you. And single family is much easier to finance.
Mm-hmm.
Financing for multifamily is really complicated, and a
Yeah.
lender is not going to give you a loan unless they know that you have experience with multifamily,
Mm-hmm.
that you have liquidity. You've got to have usually enough cash assets to cover a year of mortgage payments, and you have to have high net worth. So if you
Yeah.
don't have any of those things, you're going to have to bring somebody in as a partner with you, where you really don't need to do that with single family.
Mm-hmm.
Another benefit of single family is you have more exit options.
Yeah.
You can sell to another investor, you can sell to a fix and flipper if your house is in bad shape, you can sell to a homeowner. Where with multifamily, you're pretty much going to be selling to another investor.
Exactly. Yeah. When you get into those bigger deals, the pool of buyers is much, much less. And so it's
Yep.
harder to get in, but it's definitely more worth it in the long run, just for time freedom and that long-term financial freedom as well.
Well, and there are a lot of benefits to multifamily. If you want to buy your own building, you have one transaction and then you get multiple units at once,
Mm-hmm.
which is nice. With single family, you've got a bunch of different, transactions. And you can also leverage. So you pay less in property management fees because you have more units than you would
Mm-hmm.
if you just had a single home. And contractors, are easier to get. And depending on how large your building is, you might even be able to get an on-site manager, so you can
Yeah,
really leverage your costs.
absolutely.
So,
Now, you have 800 units. Tell us about where those properties are located.
well, they're Florida, Georgia, Texas, Arizona, Missouri, Kansas.
Got it. So
So,
pretty spread out.
yes,
And
I'm located in California, but I don't invest here anymore.
yeah, no, same here. I'm in California as well, and definitely not looking to find any deals here because I'm not going to find one. So I'm not going to waste my
Well,
time doing
and
that.
a single family, the rent
Hmm.
control laws here make it
Yeah.
very difficult to
Hmm.
manage a building economically.
Exactly. Yeah. If you're a value add investor, it's very difficult to make that business plan work when there's rent control in place, right? So it doesn't really
Exactly.
work very well over here in California. That's why a lot of us are looking out of state. Now, how do you manage and look for these deals when they're out of state?
Well, the key is to do your market research in advance, and find a market, follow some gurus that, analyze markets all the time, and then go and look at those markets. And is this where I want to invest? Do your own research. And then once you find one or two or three markets, you go and interview brokers,
Hmm.
talk to them, you know, get them to show you some properties, get on their mailing list, run your numbers. And then, when you find a property, you make an offer. And when I say you, I really mean your team. And it depends on
Hmm.
what you're going after. If you're trying to look for, 7 to 10 units, you might be able to do
Hmm.
that on your own easily. But if you're looking to do 50, 100, 150 units, you're going to need a team,
Absolutely.
because you can't do it all. Because you
Yeah.
can find the deal, but now you've got to raise, millions of dollars to be able to put it into the deal. And you have to hire project managers and those types of things. So if you
Yes.
don't want to be an active investor, you can certainly be a passive investor in those deals and not have to
Hmm.
do all that work. But if you really love getting your hands dirty with real estate, which I do, um, then you form a team and you go in.
Absolutely. Yeah, there's different ways to get in. So if you have the capital, and you can invest passively, maybe you're a full-time professional, you're busy W-2, and you don't have time to look for all these deals, you can start passively. Whereas, if you want to get your hands dirty and be an active participant in the deal, then there are ways to get in, even if you don't have the funds to get in the beginning.
Yeah, if you can bring something to the table, you can find people that have other skills and, partner with them.
Absolutely. Now, you mentioned being able to find one, two, maybe three markets that you want to target. And I've heard different philosophies on this. Some people say, you just got to focus on one market and just hyper focus in that one area and just ignore the noise of other areas. Other people I've heard like are saying, two, maybe two markets, three markets, and kind of do it that way. So what are your thoughts on that? Should you be pretty focused on one area or kind of hedge your bets a little bit?
Well, I think if you're starting out, you want to pick 2 or 3 markets, and you're doing a lot of computer research at first,
Mm-hmm.
and then you're comparing them. Which one looks better? What has lower vacancy? What has higher demographics or more people coming into the market? What is the price point? That type of thing. And so you're looking at that for different markets. And then because you're looking at 3 markets, let's say, eventually you're going to narrow it down to one market being better in your eyes than the other 2. And so you start there. And then, yes, I think at that point you go into that market and you talk to the brokers and you look at all the properties and you spend time there.
Mm-hmm.
And then, if you find something, you can buy. And then the question is, do you want to buy again in that same market, or do you want to diversify into another market?
Yeah, that makes
and
sense.
Then you've got 2 other markets that you researched. So you might go to the second one, or you might decide that neither of those other markets are worth it. And so you start over.
Absolutely. Yeah, that's kind of what the approach that me and my husband took when we first got into this business. We researched one market. We even went to go visit a couple different markets, meet people there, meet local investors that, we knew through our network. And I think it really does make a difference if you meet brokers in person versus just on the phone or email. There's a huge shift that happens when you actually meet them in person. It seems that they're more willing to give you more of those off-market deals. They kind of know your face, and there's more trust built up there. Is that something that you found as well during your investment experience?
I think that's absolutely the case. They like to put a face to the name. But the key is, for any broker, they get paid when the deal closes. Mm-hmm. And they've got a reputation. If they bring a buyer to the table, can that buyer close? And you have to convince them that you and your team have the ability to close a building. And that's why, if you've never done one and you're just starting off, go find somebody that's done 3 or 4 or 10 or 15 buildings, and then say, look, I'm part of the team. I'm researching this market for this team. And that gives you a lot of credibility.
So for somebody who is new and maybe wants to, attach themselves to an experienced investor, what are some ways that they can add value to that person so that they're not just kind of coming up to them and saying, help me, help me?
Analyze your own values. Can you run numbers? Do you have a great personality? And so you can work well with property managers or vendors. Can you raise money? If you have a lot of friends that have a lot of money, that's a really good characteristic. So what can you bring to the table? And let's say you don't have anything to bring to the table. Offer to work for free to learn. Say, hey, look, I'll come in, I'll do whatever you want me to do, and I won't charge you and you don't have to give me an interest, but I just want to learn. Mm-hmm. And, there are a lot of people out there that are more than happy to have you come along on a site visit and find out, the types of things that you look for when you're going through a building, for repairs and things like that. And so that's a way to get your foot in the door with some people that have experience. And then, you just go from there.
Number one, educate yourself, listen to podcasts like this, listen to, other online YouTube, there's a lot of courses out there on investing. So get yourself educated so that you actually have a little bit of knowledge and that you can share and hopefully add value to somebody who has the experience. Maybe they don't have as much time to put into the business at this point. Now, what I would like to go into is kind of the benefits of being a passive versus an active investor. Obviously, when you have the funds to get in, that could help you if you want to start off that way. What are your thoughts on starting off as an active or a passive investor?
Well, if you're a control freak, being an active investor is probably beneficial. But if you're a full-time professional or a business owner or an employee, when are you going to go out and look for deals? When are you going to run those deals? How are you going to
Mm-hmm.
manage contractors? So
Mm-hmm.
everybody would love to be a real estate investor, but they don't even think about it as a passive way to go. They think of it, oh, I've
Mm-hmm.
got to find a single family house and I have to fix it up and I have to find tenants and a contractor and all that stuff.
Mm-hmm.
So if you've got the funds and you want to be a real estate investor, I would encourage you to really look at real estate syndications,
Mm-hmm.
where you can analyze the deals as they come up. And the people that are running the deal have put together all the information in a packet for you. So you can look at the numbers that they're using to reach their conclusions. You can look at all that. It's going to take you a few hours to go through it, but you're not starting from scratch. They're presenting it to you. And then, you decide if you want to invest, and then you can put your money in. The other nice thing is you can diversify. So you can do a syndication that's happening in Florida, and then the next one you could do in Texas, and the next one in Arizona, just to, as I say, diversify your portfolio. And then
Absolutely.
once you make a decision, once you put your money in, you sit back and do nothing. You check your mailbox for a check every quarter.
Yeah.
And, it's just very easy to do.
Absolutely. Yeah. It's a lot easier to get into these syndications than a lot of people think. Some people think they need to have, millions of dollars or, tons of experience. But, if you are willing to either get your hands dirty or if you have, $50,000, you can get into being a passive investor.
Yeah, I would say that on average, the real estate syndication's minimum investment would be $50,000.
Yeah, that's pretty much what I've seen. For the most part, about 50,000. Sometimes a little bit higher, like 100,000. But
Yeah.
yeah,
The other things I just want to mention
sure.
is that a lot of people think about investing in real estate and they want to buy a REIT.
Mm-hmm.
So one of the things that they have to realize is that buying a REIT is like buying a stock.
Mm-hmm.
And buying an interest in a real estate syndication is a whole lot different, because you get the pass through of tax benefits that you don't get from a REIT. And that's huge. So if you've got a real estate investment in a REIT and you're getting a 10% return, you pay money on the profits that you get from that. Where if you're in a syndication, you get tax benefits that will offset the cash flow during the time that you hold it. And then, you can get a huge benefit and additional tax benefits that might even offset your earned income. So
absolutely,
definitely look into tax benefits, because that's one of the biggest things with real estate investing.
That's a great point. Yeah, the tax benefits of being even just a passive investor in these deals, much different than getting into a REIT. Another benefit of being a passive investor is if you want to become an active investor later on, it's a good way to start off as a passive investor, and then just kind of learn how things work. Usually the investors that are active on that deal are more than willing to kind of give you a peek behind the curtain, kind of teach you a few things. That way, when you want to transition into doing maybe your own deals or being more active, you've got a little bit of experience there as well.
Exactly. And there are a ton of deals out there.
Yes. Yeah. There's always a deal somewhere, right? You got to just find.
You just got to find the one that works for you.
Exactly. Find the right market. There's somewhere in the country, there's going to be some deals happening, right? So looking back on your real estate journey, what was the most difficult thing you've had to overcome? And is there anything that you would have done differently?
I've been through a lot of real estate cycles.
Yeah.
And with every one, you learn something,
Mm-hmm.
and you don't want to get caught up in the hype. You want to look at your numbers, look at the project, and say, look, if the market goes south is this still a good deal for me?
Yeah.
And that's probably the biggest thing I learned,
Yeah.
because I have bought some houses when, it was just before a crash and then the market crashed. And how do you come out of that? I mean, thankfully, I bought in such a way that I was still protected from the downside. But a lot of people, lost their properties because economically they just didn't make sense. And so that's the biggest thing I learned, was just make sure it makes sense and don't get caught up in the hype.
Yes, great point. And, kind of piggybacking on that, what would you say to somebody who is maybe a little scared to get into the market right now because of this talk about a potential recession coming this year?
So what I would say is, probably one of the best times to invest.
Yeah.
Think about it. Think about all the houses you could have bought in 2010, 2011 at the bottom of the market. I wish I had 100 of those. So you just have to realize what market you're in and look at the numbers. So if you have a house that you put a tenant in that will cash flow, if your goal is to have a cash flowing asset, then the recession isn't really relevant. If you can get the right kind of loan, right kind of tenant, and the numbers work, then you go for it. It's the same thing with multifamily. Right now, there are a lot of people that got into multifamily deals that are going to be struggling because of the changes in the interest rate. And they're going to have to sell or walk away. And so there will be a ton of opportunities to get in on deals that are really good and provide cash flow and provide tax benefits. So I would say even with the recession, things can still work. People are still buying properties.
Of course.
I remember back in the 80s, I was buying properties at, 16% interest at 7 points. I mean, I never thought I'd see interest rates under 10%. And now it's like, oh my God, interest rates are 10%. It's like, Yahoo! So, as long as you know what your situation is, what you're looking for, there are deals out there that fit.
Absolutely. And I think this year is actually going to be a great time for buyers to get into the market. There should be more deals coming as the prices start to soften even more. So you definitely want to keep looking for deals, because as you keep your eyes on the market, you're going to know when a deal pops up. You just got to analyze more and more deals, get that experience. So when the right deal comes along, you know where you're at in the market, you feel comfortable, and you're ready to take the next step forward.
Exactly.
All right, Nancy, thank you so much for being on the show today. Where is the best place for people to find you online if they want to learn more about you?
23rd Street Investors.com is our website. You can learn all about me and my partner, Tony, and our projects. And, we've got a blog on there that you can look through to get educated. And I've written a number of books on investing. So
Great.
That would probably be the best place to look for me.
Perfect. So I'll make sure to include a link to your website in the show notes below. Thanks everybody for tuning in. If you guys enjoyed today's show, please write us a 5-star review on Apple or Spotify. Every review helps us to be able to reach more and more people that are looking to get involved in commercial real estate. Today's show was sponsored by Synergy Capital Investments. To download your free multifamily investment guide for beginners, or to schedule a call to learn about our upcoming investment projects, go to thrivewithsynergy.com. That's thrivewithsynergy.com, or click on the link below.